Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Dan Bird. How you doing, sir?
I am doing fantastic. How about you?
Yeah, again, I'm doing well, man. Last week you went 5 for 5 with big tech. I would tell folks to go back and look at your playlist and see what you called for Meta and Amazon and Apple. That was really well done. But what we're going to do here is we're going to do something
that was just based on the charts too.
Yeah, that was awesome. That was awesome. So we're going to do symbol comparisons this time, comparing two things side by side, and you have some that are prepared. What are we looking at first?
All right, let me share my screen. Yeah, this is something that stock charts allows you to do, which I think is pretty cool. By the way, here's Meta. Here's a weekly chart for Meta. Look at that. Here's after their earnings right here. This big red one. Look at that. Look at that volume.
Yeah,
this goes back 5 years. That's the most volume in 5 years.
Yeah, Chamath from All In Podcast basically said people have thrown it into it's the too hard bucket. All this money they're spending on the metaverse. Yeah. Anyways.
Yeah, and there it is, big gap down. I think it's just going to go sideways right around 100 for a while. And then it's really going to depend on whether they can pull it out. But I think their metaverse play, while it may eventually be a good strategy, because the metaverse will be a thing at some point. It's just that they're way, way early. So, you've got to be really patient and be willing to wait 2 to 3 years. And like I said on the last session, I think there are some big tech companies out there that are already working on their own very quietly behind the scenes.
Sure.
And they're going to announce something that might even supersede Meta's announcement.
There we go.
So it's going to be very competitive. I mean, my view of the metaverse is that there really is only one metaverse. I don't think there will be more than one. Not like cloud. There's multiple clouds out there.
Sure. Yep.
But with the metaverse, it's kind of like the internet. There's only one internet, right? And everyone has a URL, or they have a presence on the internet, but they don't put a presence on something else that's not the internet.
Yeah.
Right.
Yep.
And that's what the metaverse will be. Metaverse will be a metaverse, like a universe.
Yeah. Right.
And you will have a presence in the metaverse. It's just like you have a website on the internet, but I don't think there are going to be multiple metaverses. So that's going to be a huge battle at some point.
Yeah, I haven't. So basically, what you're saying, to use boomer talk, is it's going to be a VHS versus beta play. Ultimately, VHS or beta will win.
Yeah.
Or what was it? The Microsoft Zoom versus Apple iPod, right? There'll be two versions and then one clear winner.
That's right. And that's a really good analogy, actually. So what was it that allowed VHS to win?
I don't remember.
There were more companies using that format than there were beta.
Yeah, because I remember beta was actually better quality, but it was more costly or something.
Right.
So people went VHS,
And there were more companies putting video on VHS. So it'll come down to, which companies, Nike or Whole Foods, Whole Foods is a great example because it's owned by Amazon.
Right.
Just think about what it would take to have a metaverse of the grocery store. That means you put on your VR glasses. You no longer go to the grocery store to shop. You put on your VR glasses and you walk down the aisles just like you're in the store. You can see everything just like you're in the store.
Yeah.
You take things off the shelf just like you're in the store. You put it in your shopping cart, and it's automatically added up, just like you're in the store. And then when you're done, all of that gets added up and charged to where? Your Amazon account.
Yep.
And then
delivered. Yep.
And then it gets delivered. It just shows up at your door. Now think about that for a second. In order for each of those items, those goods that are on the shelves, think of how many things are on the shelf in your grocery store. For each of those items, Campbell's Soup would have to embrace Amazon's metaverse and put their items on that shelf with whatever code will automatically allow you to purchase it. every single one of those items will have to embrace a metaverse.
Mhm.
They're not going to do multiple metaverses. So it's the metaverse that most of those companies are going to create their products for, their virtual products for, that will win.
Yeah.
And Amazon, I think, is in a perfect position for it, frankly.
Yeah. Very cool. All right. Well,
All right,
let's get
that's
back
just a
to
tangent. I wasn't even
Yeah.
planning on talking about that.
that was a fun left turn. All right, let's do some comparisons.
All right, so let me show you this one here first, because I had this in my newsletter. Stock charts allows you to look at two symbols side by side. And you can create 3 different views for them. You can have an intraday view, which I've done. I've created these myself. You know, the format of these views I've created myself. There's a daily view, which is a little bit different. And then there's a weekly view. Okay. So in this particular case, I'm looking at the dollar on the left versus Treasury, 20-year Treasury bonds on the right.
Okay.
Okay. So what jumps out at you right away?
Well, as the dollar gets stronger, the bonds.
Right. They are inverse related.
Correct.
Inversely related.
Mhm.
What's the second thing that jumps out at you? They are parabolic.
Oh, yeah. They're getting increasingly. Yeah. Mm-hmm.
Both of them are parabolic.
One's up, one's down.
This one's diving straight down. This one's going straight up.
Okay.
That is unsustainable. And you can look at the volume down here on the dollar. The volumes have been going up a lot. At some point, these are going to reverse.
Mm-hmm.
The dollar will start to weaken, and that will cause bonds to start to rise.
Okay.
And yields to start to fall.
Exactly.
Right.
Which I think may have already started.
It may have already started. Now, the dollar over here, for the first time, actually did so a little bit here. I mean, it hasn't gone a lot, but this is the 10-day. This is a weekly chart, by the way. So this 10-day is really a 50 to 10 week is a 50-day. So this red line is a 50-day moving average.
Okay.
So it closed just below it right here.
Mm-hmm.
If we have another week where it closes below that, that could be the catalyst to start pushing the dollar lower, start pushing bonds higher, start pushing yields lower and stocks higher into the end of the year.
Yep.
So if the dollar weakens, then stocks are going to go up.
Okay.
All right. So all of this is related to the stock market. And coincidentally, we just started the best 3-month period of the year last Friday. From last Friday until January 18th is the best 3-month period. Mm-hmm. I put the statistic in my newsletter, but from October 28th, which was Friday, until January 18th, the stock market over the last 72 years has gone up 21%.
Oh, wow. The
other side of it is from January 18th until October 28th, during that same 72-year period, the stock market has gone up 5%.
Oh, wow.
So in 3 months, it's gone up 21%, and the other 9 months, it's only gone up 5%. Okay. So if anybody reading my newsletter did not get the message, this is the time right now to be getting into stocks.
This is not financial advice.
It's not financial advice, just my opinion. I think there is more risk being in cash right now than there is being in the market.
Gotcha.
All right, so this is the dollar versus treasuries. Now, this TLT is an ETF. Again, this is not financial advice, but if you think about this one's a dollar fund over here. If you think about this ETF, you can buy this just like a stock, right? If this does reverse and start going down here, this is going to start going up. So you actually could buy this TLT and you could play the market as it rises. I don't know how far it's going to go, but just an idea. The next one I have here is the dollar versus gold. So the dollar's been going up. Gold has been sort of going sideways. And actually it's been going down lately as the dollar has really accelerated. This is another one where if the dollar starts to weaken, gold will probably go up. Gold is also inversely related to the dollar. This is one of the reasons why this is kind of cool, being able to see these side by side like this.
Yeah.
The second one is Rio Tinto, which is a steel company, versus Freeport-McMoRan, which is a copper company. And in this case, I want to talk a little bit about renewable energy, because that's where everything is headed. Governments around the world are trying to push everyone to go towards renewables. Renewable energy means sun, wind, wave energy to a degree. It's all renewable. Those are renewable sources, right? However, to create energy out of those, you have to have things that are not renewable. In order to create the machinery that converts that renewable energy into actual energy, you have to have non-renewable components like steel and copper.
Yep.
All right. So here's steel on the left. This is Rio Tinto. These are both stocks that you can buy. Rio Tinto, this is steel. It's been kind of going sideways and been going down. And this is copper on the right-hand side. It's just starting to go up a little bit. So I think these will be lagging indicators behind renewable. I think there are other things like batteries and things like that that are already taking off for renewable, but these are things to keep an eye on. I just thought I'd put those side by side too, to see what the relationship looked like. In this particular case, I think copper actually looks a little bit better than steel right now.
Okay.
Next one is XLY, so discretionary versus staples. Discretionary being things that we want to buy, would like to buy. Whenever you go into a recession, you stop buying those things. Staples being things that we have to buy. When you go into a recession, I hope people will still buy toilet paper and toothpaste and soap.
Shampoo
I
and
hope they will.
Yep.
So you can see here that discretionary is actually continuing to head lower. That's actually not healthy for the market.
Yeah, which makes sense. Yeah.
Staples is also going lower, but it looks like it's kind of turning around a little bit right here. Both of them are below their 200-day. Actually, this is a 200-day. The gray dotted line is a 200-day, 40-week, 200-day moving average.
Okay.
So just looking at those side by side. How about Bitcoin? Bitcoin versus Ethereum. If you've ever wondered which one would be the better one to buy, Bitcoin or Ethereum? Well, Bitcoin on the left over here has kind of hit, looks like a double bottom right here. It finally got back over 20,000. It looks like it might be ready to start running higher again. Ethereum, on the other hand, while Bitcoin had a lower low when it made this double bottom, Ethereum had a higher low.
Oh, okay.
And Ethereum is actually starting to take off sooner. So Ethereum might be the better one to look at right now.
Based on the charts.
Based on the charts, right. And a way to play each of these is using an ETF for each one. This is the Grayscale Bitcoin ETF and the Ethereum ETF. And they look similar to what the actual charts look like.
Right.
So you see, if you want to buy Ethereum without actually buying the crypto,
both
of these are right around $10. Bitcoin's a little above. Bitcoin's actually at $12, and Ethereum is at 1044.
Okay.
So Ethereum looks like it's just starting to take off. Bitcoin might also follow behind it. So if you wanted to play crypto without buying crypto, you could do it by using these ETFs.
Very cool.
GBTC, ETHE for Ethereum. And this is, I think, the last one I have, which is renewable energy versus, actually, I meant for this to be not chemicals. I wanted this to be, I don't remember the symbol for it, but I wanted it to be the, maybe I can do it this way. I don't know.
It's okay.
I don't
You know what?
remember.
Do me a favor. Why don't we throw in
Anyway.
Google
Okay.
versus, let's see, Google and Apple.
All right. There's an intraday. Here's a daily view. Apple looks better.
Yep. Oh yeah. Even I can
Apple's
see that.
above. Apple's right at its 200. It got above its 50. You can see Google over here is still below all of its moving averages.
Okay.
And on a long-term weekly, again, Apple looks better. Yeah, for sure.
Very cool. And what platform do you use to do this? Stockcharts.com?
This is stock charts. Yep. You do a gallery view. So you can go up here on stock charts and select gallery view. And then you can put in, what other ones do you want to look at? JPM and.
Yeah, JPM and STEM. Just for fun.
STEM?
Yeah.
They're not even in this. They're not even in the same.
Oh, they're both stocks.
They're both stocks. Yeah. But I don't know if it's
not a fair comparison. Yeah. Not
a fair comparison.
Yeah. All right. So do JP Morgan and Goldman Sachs.
Goldman?
Yeah, Goldman. GS.
What's that? GS,
I think.
GL?
No, I think it's just GS.
GS. Okay. All right. Goldman Sachs. So here's the daily view. Goldman is already well above its 200-day moving average. JP Morgan just got above its 200-day.
Look at that. Yeah.
Look at that. You've made 20% already on that.
I have. Yeah, roughly.
Here's the weekly chart. I like looking at this on a weekly basis because it kind of gives you a long-term view.
Yeah.
So again, JP Morgan's just breaking out of its moving average lines. Goldman has already broken out.
Cool.
So Goldman looks like the stronger one right here, but JP Morgan looks like it might be accelerating faster.
Very cool. Well, Dan, do me a favor. We got to wrap this up. Show your newsletter, please.
Sure. Right here. Just send me an email to breakpointtrading@gmail.com. And I'll send you last week's newsletter, and then I'll add you to the list for next week.
Yeah, and if you want to revisit Dan's call on the 5 tech stocks, the 5 generals, if you will, go back to last week. He has a playlist just called Dan Bird. I thought it was really interesting to watch. He called 5 for 5 just by looking at the charts. Pretty well done, buddy. Thank you very much.
Yeah, it was fun. I love looking at the stuff and comparing things side by side. It's a lot of fun.
Awesome. Thanks, buddy.
All right. Have a great weekend.
You too.